Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, October 1st, 2019. Lots to cover, both something, little something for the bulls, a little something for the bears today. Let's start out here with just a quick overview. A lot of the charts that I've been focused on recently: XLK, SPY, QQQ. XLK, of course, being the tech sector, the largest component of the S&P 500 and NASDAQ 100. And we're dancing on that trend line. I call it the BOD, benefit of the doubt trend line. I have this white trend line come off the lows on December 24th, multiple reactions along there. We started to dip below it recently, and so what I'll often do is if I can identify another trend line or support level close by, I'll add that as well, and I call that the BOD. You got to give it the benefit of the doubt. The trend, the overall primary trend is bullish, so if you want a pretty clear sell signal, you wait till the last of the two are broken. So you can see that we pretty much closed on it, and this is the consistent theme lately. The indexes and the tech sector are hugging these trend lines like an exhausted sailor thrown overboard, clinging to a life preserver. Just holding it so far. A couple intraday breaks, and today we closed right about on it, maybe a hair below, but again, little price support there. So that's where we're at. Still can't rule out a rally up. So like I say, support is support until unless broken. But today, I'll tell you, the market felt heavy. I don't like to, well, I do. I try to extrapolate, not my feelings on the market, but what market participants are doing. And I'll go over that in a second. If you traded today, pretty much we had a, pop in the morning early and then a reversal at 10 a.m. when the ISM numbers came out at 10:30 a.m. and then a reversal there, which coincided perfectly with my bounce target that I posted this morning. I'll get to those charts in a second. Bigger picture, look, we can still push up should the markets hold this support, rally tomorrow. I think it would be probably some kind of headline tonight. Today's price action was just, and again, one day doesn't make a trend, so I need to throw caution to the wind there. But overall, the price action was very bearish. The market didn't bounce where it quote unquote should have bounced today at a few times on the way down. I'm going to get to those levels in a second. So there it is. We are precariously perched right on support on XLK, QQQ. Same story, really cracking below that trend line, not impulsively. Today was down quite a bit, but it wasn't really an impulsive selling. It was just persistent selling. If that's one word I would use today, since the reversal 10, it was just a steady, slow grind, but persistently lower. Every little attempt to bounce where the buyer stepped in just got sold into, and again, we weren't down huge, so it's not anything bears are going to high-five each other on. QQQ is down about 0.85, a little less than 1% there. And again, starting to crack those BOD trend lines, but I've had to drag this trend line because that's been the theme lately. This market just kind of cracks and just keeps inching down. Then you can see a support line right there about 185.70, and really that's the recent lows we have to watch. There's Friday's lows, and that's one thing I wanted to point out, that QQQ remained above Friday's low, whereas SPY undercut it today. So QQQ, to me, even though it's not as diversified as the S&P 500, is the more important of the two, because when tech breaks, the market breaks. So far, like I said, I won't call it a stick save or anything like that. We just need a little more evidence, a little nudge to get this market going to the downside. Otherwise, and I'm going to show you some things that could be the catalyst for a rally here. But before we do that, let's just look at SPY real quick. Let's look at one other chart here. Yeah, we'll look at this one. QQQ back down within the August trading range, that blue box right here. And then you have SPY, which entered slightly above the top of the August trading range. Remember, when we look back, we've had a couple tests, including Friday, a successful test. And as I said, that's where, if I was longer term bullish, and I made clear I went long there, but not for a long-term trade. I went long that day at the lows, but I didn't tuck it away. I'm still short in my swing trading accounts, my long-term accounts. Day trading, I'm in and out, and my active trading account, long and short. So that's what I mean by not buying that as a swing trade. And so far, this is pretty bearish, because as I said before we even got there, I was calling for a pullback to that target, and I said, look, if I was bullish, and I expected the bulls to step in, and they did, they bought it up pretty hard that day, but no follow through. where is the follow-through buying? It was smacked down, and again, certainly the ISM report helped turn things, but again, it was not by mere coincidence. Right when we reversed is also when the markets hit support, those targets. I was looking for a reversal today, and we're going to get to those in a second. But so we are flirting with the top of that August trading range, and that's no bueno for the bulls. To get back into that level, that was a over a month-long trading range. We broke above it. And when you come in and backtest a level like that, you shouldn't look back. It should be at most you backtest and take off. To fall back in there, technically is not a good sign for the markets, and unless you're obviously a bear. And there's a trend line I just added right here. We'll watch that one as well. That comes in around the midpoint of the channel, and let me just keep it kind of simple. And I always hate to, the risk of oversimplifying things. Put a midpoint of the channel. I've showed you before that QQQ and SPY tended to trade when you really zoom in tight. They trade in clusters. A lot of times when you have a trading range, even a parallel price channel, a rising or falling price channel on a stock or security, you'll notice that typically the midpoint of the range acts as support and resistance. You trade above it, you bounce off it. Once you break it, you tend to trade down below it, and you can see these clusters there. So should we fall back into the range, you have an uptrend line and the midpoint of the range coming in together, and if that breaks, I think we'll also have taken out these key trend lines I'm watching. I think that's it. I think that'll be it, and we'll just go on down through the bottom of the range. Before we move on, let's look at, I'm going to get to the intraday charts because that's where the most developments are right now, but I want to show you something. Here's a weekly chart on SPY. Same chart I've been covering for a long time, same levels. And really what stands out, you'll see quite a few trend lines. You have your primary bull market trend line. But what I want to point out here is this divergence. I've pointed this out many times. This is multi-year, almost 2 years, right? From about early 2018 to right now. We're almost at the end of the year. So a little shy of 2 years, negative divergence. And then you have, of course, a wedge. In SPY, you already broke down, and we've been back testing below, waiting for tech to break in QQQ. QQQ, as you can see, we have almost identical divergence, nearly 2 years spanning, negative divergence indicators making lower highs, prices making higher highs, giving us this nice clean wedge. Forget about everything else for now. So you see about a 2-year rising wedge pattern on the weekly charts. Well, let's talk about, for those of you that, think it's a, boy-cried wolf scenario that, hey, this is going to break down and it's going to get ugly once it does. Well, let's look at something today, and I know it's just one stock, but if you were watching the markets today, the news was Interactive Brokers. That's where I have my primary trading account. I use multiple brokers, including this one, and I'm just going to pick up Ameritrade. They all got whacked hard. Ameritrade, E-Trade, all those online brokers got smacked hard. Ameritrade, which is a big company, lost 26% today. 26%. And yeah, sure, the catalyst today was most likely Interactive Brokers coming in and announcing they're going to offer a new trading platform with free trades. They're still going to keep the the traditional platform. I'm going to stick with that one. It's for more active traders, professionals, and then they'll have for retail traders free trading platform. Now, okay, so that's the catalyst, but it's not a random event. And what I wanted to point out, and the reason I showed you those divergences, this chart is simply very similar to the charts I just showed you, those bearish rising wedge patterns on SPY and QQQ. This is a weekly chart, 10-year weekly, like I was just looking at on SPY and QQQ. There's divergence that spanned, about a year and a half or so right there, negative divergence, right, to the top. And when we finally broke down, we had a back test, a kickback. So Ameritrade's in a bear market, and the reason you have a 25% drop today is now that bear market's really getting to the point where people are noticing it's not a correction anymore. This is a bear market. Here's a stock like many out there. Believe me, this is not the only stock. It is not the only sector. It's not even the only index. I'll show you that in a second. But it's down 45% from the highs. This is bear market action to see this. And so the stock market's going to do the same thing, roll over slowly. And at some point, guys, whether it's tomorrow, next month, or next year, we'll be in a bear market. if we're not already, and you'll start to see at some point selling accelerate to the downside. And in fact, this is probably for you Elliott wavers, maybe a primary wave 3, you know, wave 1, 2, wave 3 being the most powerful wave in a 5-wave pattern, or a 5-wave cycle there. But either way, now look, this is not random, and I didn't add this. You can, if you use Interact or TC2000, if you create a trend line, that's it. It'll show that trend line was created. You can see there on August 28th, 2018. That was right here, right around the time it broke down and back tested. That's when I had this trend line refined. And if you move it, it'll change the date there. So again, this was priced into the charts, just as I believe the same things are priced into SPY and QQQ. Now the takeaway is, once we break down, there might be a crowded rush for the exits. So we're not there yet. Let's look at some levels, and we could be close. Like I said, we certainly are close. It's just a matter of needing to give this market a nudge. All right, so let's start out with futures and see what happened today. Okay, I'm going to start with the charts I posted on right side of the chart today, starting out in pre-market for members. We'll start out here with NQ, NASDAQ 100 futures. And at that point, I said we had just pulled back to this trend line. We're watching this. We have minor uptrend line support, so you can see we broke above the primary downtrend line there and pulled back to this minor uptrend line. So that gave you an objective long entry. Anytime you pull back to support, you have an objective long entry. And that one, well, let's go back. That was at, all right, where is it? Blocking out here, 7:37. So a couple hours before the open today. That's AM Eastern time. Next chart up, this is what I said, looking for something along these lines. I'll move up to here, 79.44 plus. You guys remember that head and shoulders pattern I pointed out a few weeks back, maybe even a couple months back, before it even had formed in the early stages, right after the head was put in, looking for a right shoulder. And that played out pretty well, broke down. Here it played out to about the measured target, maybe a little shy. The measured target being the distance from the head, top of the head, down to the neckline. That's your measured target. So you take this line, add it to where it breaks down. That's about where we went. Now, a neckline isn't just a random line. It's a support line right there, uptrend line. And so far, every time we've come back to that neckline, that resistance level has capped the advances. We failed. We pulled back. A little one there, and then a bigger one. We didn't end until we got here, and so that's I had a target of that level plus 79.44 is a well-defined support level, and so that's where my bounce target was today. Now you can call it mere coincidence. I do this all the time. People come out and say, "Oh well, the market rallied today because of blah blah blah," or reverse because so much more often than mere coincidence these levels coincide. So maybe, and the reasons could be manifold, and you guys can fill in the blanks. Maybe it rallied up in anticipation of a positive or better than expected ISM number today at 10 a.m. because that's where it rallied. Either way, it's not mere coincidence. Right when that level was hit, I posted it in real time before, 78.44 neckline level effectively hit. Close enough. I always reverse just shy of the actual resistance levels I'm targeting, and then had us going on to reverse from there and break down. And of course, that's what happened. Big red candle right through the trend line. No fooling around with it. And then we back tested the trend line where I said reversal's likely. Now here's where I'm going. All right, so a reversal was likely there because we had pulled back to back test that trend line once again, and then we had support just below at 77.54 right there. And we had a reaction there early in the day. Let me get to the updated charts. I believe that's let me go to the updated charts now. All right, so hard to see here. I'd have to put up a 1-minute chart, but we did flirt around that area for a while. But what happened is we didn't have much of a bounce. I even took a reverse long there. It didn't pan out, and then got out of that, got stopped out of that and went long again down here by the lows today. I'll show you that in a second. But here's my point. This was a very obvious place for longs to step in. Dual support levels after a knockdown, and they didn't. And that's the theme today. All day, persistent selling. The market not bouncing where, quote unquote, it should have bounced, where the buyers should have stepped in. Now, I'll get to the updated, well, this is an updated chart. So a couple things before I leave NQ. we put in a divergent low on Friday, and as I said earlier today, we did not undercut those lows today. So that's one reason, we need, although like I said, if said it last week, if you're short, be short, but hold off. I wouldn't get aggressively short until we see Friday's lows go with conviction. So we did that, well, not with conviction. We took it out in SPY, but by a marginal amount, and we did not take it out in NQ. So we'll watch that. Continued move down could do that. Now, we did put in a divergent low, and we've rallied from there. So maybe, possibly, this is just the correction, and with another leg up to come, because we did put in that divergent low. So like I said, I'm giving you something for the bulls, something for the bears. We had a downtrend line, however, that was broken out and then impulsively taken back through it. That's a failed breakout right there. So net, there's no way to spin today as anything but bearish. I mean, of course, we're down almost 1% in NQ. So really the bulls will need to rally, and they can. There's still an opportunity, but the downside, there's not a lot of downside before things start to get ugly. So that's where we close. This is right now real time here in NQ, and let's look at ES. Okay, I posted I think 3 charts on ES today. First one was this morning, same thing, at about a little after 7:30 Eastern time. And we had these rising wedge patterns right here, but we had pulled back to the trend line. Actually, we pulled back to intersecting support, and that's why a bounce was likely from that point. You had a breakout here and a back test of this primary downtrend line on the 60-minute chart, and then a pullback to this uptrend line. And so that's why we bounced from there. It was a technical bounce. That was, again, in pre-market. The next chart up was this one. Yes, and I was more focused on NQ. That's where I laid out the bounce targets earlier, as I showed you. So ES reversed when NQ did, of course, and then went on to break that trend line. And as I pointed out here, what time was that? About 11, a little after 11, quarter after 11 this morning. ES had pulled back to the 25.58 level, following an impulsive drop. And, we could have and should have bounced there, but like these arrows show, if we didn't, we're going lower. And we were going down here to, I said, 29.39, and that was then, this was the last one I posted today, about 2 o'clock, a little after 2 p.m. and I said we hit it. We hit that 239 level because we failed to bounce. So that's what I'm trying to impress here, is that today the markets felt very heavy. The buyers were just completely MIA, not stepping in where they would normally step in for at least a tradable bounce. And so, I went long again here at the end of the day. I have some longs right now. I'll give them a little room overnight, and I'll show you why. Well, okay, so that was, again, about 2 o'clock. Nothing much happened from there. We hit that level, and as I showed you, we still had the divergences intact, though very close to being taken out, meaning if we move much lower. Here, let me just get to the updated chart, because again, we didn't go much farther from there. 29, 39, 30, about a little after 2. Let me find ES down here. Here's the updated chart. So there it is. We did have a bounce there. We bounced a little, rallied off that level, but not very far. Again, it was a very muted bounce, and I need to extend these divergence lines. I had them drawn in with screen capture software. Actually, right there, PPO, we've burned through divergence now because we've made we undercut this low. So there's still RSI divergence by the skin of its teeth, really about an equal low, more so right there. And more importantly, okay, I'm going to get to SPY 60-minute in a second. SPY, or I already showed you, I think we dipped a little down into the trading range, a little below 294, but at the same time, and this is a level I've highlighted recently too, on ES, on the stock futures for the S&P 500 index futures, I have a support zone that runs from 29.39 up to about 29.46. I've covered that before. Why? Because I have reactions down here right around that 29.39. It's quite a few. And then a couple that came up to the top there. So we hit a perfect back test of the bottom of the August trading range in the ES stock futures. So when I said a little bit of something for the bulls, a little something for the bears, this is could be the final test, because we never had a full test of the bottom of that zone. We hit the top of it right here, and that was certainly enough for the bulls to take it and run, but they didn't. They couldn't really follow through. So What this chart shows me, besides that test of the so far a test, I'm not even going to call it a successful test. I would say a successful test if we came back and hit it and then reversed. That would be, this is just, we closed pretty much testing it. We had a very muted bounce, and that's the other thing. So all day today, levels where the buyers should have stepped in, and they've stepped in a little bit before the close, but really not much. And you can see where the futures are trading as I'm doing this now, right there, right on that same level. And I've had this line there for quite a while. So that's that, and that's it. So if we go much lower, we're going to take out the RSI divergence here. We're going to enter that August trading range. We've already dipped slightly into it on SPY, but we'll certainly be into it now on ES and NQ. We've been in that trading range for a while now. NQ and QQQ already entered that. So all in all, like I said, net bearish, but you just can't give an all clear sell signal on the market yet, because that reason we're testing a very key support level and it hasn't failed yet, and there's still a chance something happen. I think it'll be, if we rally off this level, probably be some kind of headline will come out overnight, from the time I'm doing this video to tomorrow morning, and that'll cause the futures up. Otherwise they can sink down in here, so I'm not giving it a lot of room. I'll give it a little bit of room, but not a lot down in there. That's not going to be good if it does. And so the other things that stand out on here, like I said, I do these videos, there's just so much in the charts. False breakout, bull trap, aka whipsaw signal, anything you want to call it. But that is a breakout of a downtrend line with an impulsive rejection. And again, yes, ISM certainly accelerated the selling, but the reversal came to almost to the penny, where it was likely earlier predicted to come in on NQ, the Nasdaq 100 futures, and so that's that. Okay, and for you ES traders, or I'm sorry, ETF traders, SPY and QQQ, there's the big 294 level. It's colored in blue because that's the top of the August trading range, August to early September actually, until we broke out. Big gap, near test, almost a perfect test, and now a dip slightly below. They tried to rally it right back to 294 and just couldn't get it back above there. Had they done that, and that's one reason I position long here, is if they could have done that and popped it impulsively, that would have been a fake out, and that would have been a bear trap. Suck in some shorts and bears on 294. But again, I'm not going home heavily positioned in my trading account at all. I'll keep a light long position on now because I don't like the price action today. But trading 101 says you buy a pullback to support, or you buy a breakout above resistance if you're going to go long. And so I was able to reverse there and missed that one, got back in, and so far, well, this one's flat. Most of my money today was made. We hit our price targets. I posted the charts on silver and gold even yesterday, and those targets were already hit today. So we silver, gold, book profits there on those when my targets were hit, which, by the way, and that's that's analysis for members, that came right when we fell here today to the support levels really on ES that I was showing you, and I posted that for members when we fell down to the top of the trading range on ranges on ES. At that exact time, gold hit my key 1492 targets, silver hit my target, and all that. So we were able to get out, book some profits in those. All right, that's about it. Oh, and then as I said, something for everybody. Look, this is why there's still a potential to rally. We still have on the 60-minute chart of SPY right here, divergent low. We have a fake out, so it's a mixed bag of technicals. I'm not going to try to spin it any other way. We have a failed breakout, which is bullish right there, but we're back down to the bottom of what appears to be a bullish falling wedge pattern. Remember before, I was favoring more downside within this wedge. It wasn't mature. If we were going to form a wedge at this point when it broke out, it was too early. Wedges usually break out down here in the sweet spot, somewhere about 70 to 80% towards the apex of the wedge where the two lines meet. And so there is that potential, but I wouldn't let it go very far. If we go a lot lower, it's going to foil that potential bullish setup. It's going to burn through these divergences right there, and we could go a lot lower. So that's that. Same thing on QQQ. Remember, we already had divergence, and so far that divergence hasn't been negated or extended. If QQQ happened to shoot down, well, it would take until tomorrow, of course. If the futures gap down, as long as they could reverse quickly. If we gap down in QQQ, undercut the low slightly, if we reverse quickly, as you can see here, what I'm doing is extending these divergence lines. Those divergences would remain intact, but only on a marginal new low. Much more than that, it gets pretty ugly, because we take out this uptrend line right here. We would be well below the trend lines on the daily charts. So it could be one heck of a bear trap if that does happen. So these are things you have to be adaptive. You have to watch for this tomorrow. So, you know, on a gap down, it wouldn't, unless it's way down, it would not still be an all-in or an aggressive short entry for swing traders. But if we gap down and we continue to go down, we burn through the divergences, it might be. Likewise, if we gap down and you're a bull and you want to take a shot at a long position with a stop not too far below for that potential scenario to play out, again, that would be this wedge forming like this. That's certainly an objective trade. You can quantify your risk. Personally, and I said this on the site today to members, I really much prefer, especially in volatile market conditions, trading futures, because I can control my stops. I can have a stop loss order. The NASDAQ 100 futures, S&P 500, even the small caps, RTY, they trade virtually almost around the clock, almost 24 hours, and they're liquid. At 3 in the morning, I can have a stop loss order and not have to worry about it executing in a lousy fill. There's almost always liquidity in the NQ is always trading in the ES, usually in quarter point increments. It's not, you don't have to worry much about that. And where I'm going with this, I understand a lot of people don't have the money. NQ is about $150,000 of exposure per contract, which is obviously too rich for some people's blood. The new micro E-minis, which are the symbol is MNQ, just put an M for micro in front of it, MES, or on the small caps, instead of MRTY, they do M2K, the M, the number 2, and the K. And you can look those up. Just Google search micro E-mini futures. Now, the nice thing is, as I'm doing these charts and I'm showing you levels on the futures I'm watching, levels that I plan to trade off of, the micro minis trade at the same exact levels. They're the same futures contract, well, almost essentially. They just use a smaller leverage factor. But the price levels are the same, so you can use the charts of NQ to trade them, or go off someone else's charts and replicate these charts on MNQ and MES if you're a trader that way. And then again, you can do good to cancel, stop loss orders on those. Liquidity might not be as good in the micro minis, I'm not sure. I trade the NQ and ES, but just food for thought. And they also crude, gold, silver, micro futures, and natural gas, even minis, and a lot of those where you don't have to trade the main contracts that I trade a lot. But I do cover quite often in the analysis here. Okay, long video. We're going to wrap it up there, and that's it. So right now I'm cautiously near-term bullish for tomorrow because of the charts, still constructive, closing at support. But if it goes the other way, it could get ugly. So the story there is just if you did go home long, whichever way you went home, just put a stop, not too far on the other side, because I do think the market's probably going to make a move, pretty good move one way or the other tomorrow. I doubt it'll trade on these levels another day. Possible, but we'll see. And this has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.